the trend. So now what? You would forgive me, I'm sure, if I ran away from Forex trading forever after those 2 episodes. That's what I was thinking after those 2 massive screw-ups. Then fate would help me make the most profitable decision of my life. Actually, it was 3 decisions. First, I decided to do whatever it took to figure this trading thing out because nobody ever made a fortune by being a quitter. Second, I decided to ignore all the mouthpieces on the public forums and to ignore all those people selling hyped up baloney online. Third, I decided to learn the solid and fundamental and proven basics of Forex trading from a mentor who had already been through the trials and tribulations that I wanted to overcome. I never did tell him about how much I lost before I met him out of sheer embarrassment. After my mentor took the time to walk me through the process of building a profitable trading system from scratch, that's when everything finally clicked and I had my first big breakthrough. You see, trading is all about matching a strategy with your personality type. So I went deep into researching all the different systems available that were based on successful indicators that had been around for decades. Makes sense to use proven techniques, right? And today it's my turn to give you your big breakthrough to help you the same way my mentor helped me. Just before I show you the nuts and bolts of how to build this new system, I want to share something extremely important with you. My super trading tip. When you were a kid, if you ever went swimming in a river or in the surf, you probably heard your mum or dad yell out, "Don't swim against the current." Why? Well, simply put, in most cases, you either don't get anywhere or you find yourself moving away from where you're swimming towards, and it takes a lot of energy for very little reward. The worst possible scenario is you get sucked out to sea with the undertow, swept away downstream, or simply drown from exhaustion. The same applies to trading. You've probably heard of the catch cry, follow the money flow. If you think of every time frame as a current and the money flowing in a certain direction as the money flow, you can start to identify which way the current is flowing and therefore which way you should be trading. Listen, in trading, there are numerous time frames that you can trade on. For example, you can trade on the 5-minute, which means you have a new bar or candle every 5 minutes. Or you can trade on the 15-minute, which means there's a new bar or candle every 15 minutes, and so on. But there are several key time frames that are vital to keep track of if you want to know the true money flow. The 4-hour, the daily, and the weekly. Most traders use the short-term time frames, but it's what's happening on the higher time frames that's really important. In other words, which way is the money flowing on the weekly time frame? Which way is the money flowing on the daily time frame? Which way is the money flowing on the 4-hour time frame? These time frames represent the overall trend. The trends that the big institutions, the market makers, and the professional traders are focused on. The macro trends. So if you're trading on a shorter time frame like the 5-minute, 15-minute, or even the 1 hour, and you know that the higher time frames are biased in a certain direction, why would you want to trade against that direction? It would be just like swimming against the current, and it's something that you definitely want to avoid. Here's the truth about why you should avoid trading against the money flow. You could be tricked into buying the top or selling the low. You could lose the trade and deplete your capital. You could significantly erode your confidence as a trader. Let's take a look at an example. The dollar yen was trending up from around October 2012 to December 2016. In fact, it rallied over 4,800 pips in those 4 years. So let's say you were looking at the 15-minute time frame and you were thinking about selling, anticipating that price is going down. And let's say that the trend current money flow on the weekly time frame is up The trend, current/money flow on the daily time frame is up. The trend, current/money flow on the 4-hour time frame is up. Do you sell? Let me check the chat for a second. Okay, Dan says yes. Bob says no. Chris says no. Paul says yes. Peter says maybe. Jane says no. Candace says no. Harry says definitely not. George says no. Okay, great. Thanks, guys. So, do you sell? Even if it looks like the price is going down on the time frame you were trading. If you don't know what was happening on the higher time frames, you might sell. But you would be taking a big risk of trading against the trend, even if you're not aware of it. The equivalent of swimming against the current. However, if you did have the insight into which way the direction was really going, in this case going up, you would avoid selling this particular currency, wouldn't you? By avoiding these scenarios, you avoid the pain and suffering that results from not heeding to the same warnings from your parents that you know to be true. Don't swim against the current. On the flip side, the wisdom of floating with the current is easily understood, and it's far easier and much more profitable to trade with the real money flow, the trend of the higher time frames. It requires far less energy, and it allows you to get to where you want to go faster and easier. Once you start floating with the current and trading with the real trend, you will quickly find that your trading becomes much easier with less stress. You experience a high probability of winning trades. Your confidence as a trader significantly increases. Your trades end up generating a lot more pips. Your equity tends to be positive most of the time. You see your capital increasing consistently over time. Your trades generate bigger profits than normal. You trade less because your trades last longer. Your trades require less supervision, and you make more money quicker and easier. So how do you float with the current and determine what the real money flow is? Simple. You look at the higher time frames, the weekly, daily, and 4-hour time frames. These key flows of money will tell you exactly what is happening at any particular time. All you have to do is interpret them correctly, and you have at your disposal the precise blueprint of what to do, no matter what time frame you are using. Once you understand this, you'll realize that there is no actual secret, and the answer to achieving consistent success as a trader has always been as plain as day. The problem is, to interpret multiple time frames manually on multiple currency pairs can drive a person insane. It requires some intensive brain power and the ability to process a lot of information